Good afternoon, everyone. Jason here. Today is March 8th, and this is your aftermarket update. So we ended up having a nice day here at the Oil Trading Group. We had a couple of, we had two tries at a trade. One got hit but no filled on the ES. It was actually the high of the day where we got no filled. I'll talk to you about that here in just a moment. And then we took a really nice CL trade after the inventory report. So let's talk about that ES trade here. If you come back here, we have what we call our market maker levels. We're going to turn off everything for the moment except for this structure target. One of the things that we look for here is the market to go from this structure target into this, from this daily structure signal level into this daily structure target. Specifically, when the market starts to gain traction above the level here, then we look for it to go up to this daily structure target. Now, the way that, and by the way, this level here was 23.73 today. And so the way that we play these levels is that we look for, to try to get in one tick ahead of the level. And so today that one tick was 23.73. I've got a video here today. I'm just going to show you the hit but no fill, where we did try to get in here short today. And what you then look for is this market to move all the way down to the daily structure signal underneath it here, which is at 2360 half. That is the ideal move, and that's the expected finishing move on this particular. When you come up from this structure signal to the target, you expect it to come down to the structure signal and maybe even as deep as the structure target down below. So you may ask yourself, why, if you got hit but no fill, did we not just follow price action down a little further and jump in? Well, we've talked about this a lot in the room, and that's just not the way I trade. I have a particular place that I like to get in. I may adjust it by a tick or two along the way, but for the most part, I try not to chase entries. What I've learned over the years, and it has served me well, is that there are many other buses along the path. There are going to be other opportunities in a trading day that will allow you to not have to chase. So we did end up calling and selling the high here today. I did not get in. I got hit but no fill. I'll show you that here in just a few moments. But that's the bad news. And so let's just kind of play this all the way down. It did come down all the way to the daily structure signal here. And we may wake up tomorrow and this level here at looks like 66.25 is a possibility for this thing to touch. But inside of the trading session today, which is where we are at the moment, we did come down to the daily structure signal underneath it, which this moved from 73 down through 61 was 12 ES points. And so, again, you may say to yourself, well, why didn't you just jump in? And again, like I mentioned, there is no chasing really for me. It's either going to get me what I need to do or we'll wait for the next opportunity. And so there were some additional opportunities here today, but we got really involved in a nice CL trade after the inventory report today. So let's talk about that for just a moment. So if you take a look here, same kind of idea. You have your market maker levels, and you had this real heavy confluence of market maker levels right after the inventory report. So if you look, let's just pull this back just a little bit here. Okay. So price action comes down right before the number. You get that number, the market rallies into the daily structure mid, the market structure target. You get a couple of additional bars rotate out, and there is your daily revision signal that we came up into and never closed above. And so what we were looking for here, and where you're going to see me get in, is we talked about the fact that if we get to this revision mid here today, then I would be looking to get short. We needed to get from the revision mid down through this structure signal, but that once we cleared this hurdle here at the revision mid, we were going to be looking to target all the way down to 52.23, the daily structure target underneath. All right, so again, same kind of idea. There's the daily structure signal, and just like I showed you on the ES, we'll turn these off for just a second. That's the revision mid. I'm going to turn that off. That was the entry point, but just for the sake of this discussion, I'm going to turn those off and let you look just here. Once you get below this level, all right, so the way this works is you came up here, you found resistance here, and we could not get down to the daily structure target. So we came up into this daily structure mid, at 80. We could not get to the structure signal above, and this is all part of the training program. Could not get to the daily structure signal above, so you look for it to rotate down into this daily structure target here at 52.23. Once you add these revisions, which are dynamic support and resistance that occur at different cycles throughout the day, we had another entry point here to kind of catch on board this move up from the structure, this move down from the structure signal. So we get in here at the revision mid, and we look to hold on for this move down to the daily structure target at 23. So what you're going to see is you're going to see and hear me get in at 60 on the video, and as the market goes through, it doesn't take long to come right down into our target down here. Now, there was another level underneath this here that we talked about finding support down here around this 15, 14, and then 12, and then the market comes down, bounces a little bit and rotates, and then comes down into that level again. Now, having said all of that, the crude today, so here's what I want you to look at before I show you this. I'm going to bring you down into this bottom right-hand corner of the screen. At this point, that was 81 ticks on the total range. The 10-day average has been 96 ticks, and the 20-day average has been 102 ticks. So there was really no expectation that the market was going to continue the aggressive push down that it ultimately did. I'm going to show you one more idea here on a daily chart, and I'm going to show you what I'm talking about here. All right, so this is the daily chart. If you back, let's see, this is, let's back this out here like this, and that's, of course, this is today's bar, but if you just come back into it right here, we'll turn off all of the drawing objects, and you look right here, okay, so you just don't take today's bar into it, and you say that this has been the range. Let's grab this. Okay, so if you just take the top of this bar here and you drag it to here and across, right? This has been a range of 472 ticks over the course of 56 bars or 85 days. Really, it's a little bit longer than that if you come back into here, right? If you drag this back here just a little bit into right there, and you drag this over, you can see that the range has been really over 95 days. So 3 months of this real choppy activity. We hit the top of this range and bounced down. So again, my point is this. This was a reasonable expectation for a target. Now, I'm going to show you here in a minute the market just goes crazy to the downside today, but this is a reasonable target from 60 down to 23. If you look down here again in the bottom left-hand corner, you could see that the average daily range was 96 ticks, and we were already at 81. So there was really no reason to believe that the market was going to unfold like it did today, but it did, right? The market falls apart really here late into the session, right? It just continues to come down and down and down, and we're rotating now around this market structure signal. So again, when you look at it in this context, you may say to yourself, well, gosh, that was easy. No wonder you got 73 ticks on the day. But it's not quite that simple when you take into context the fact that the average daily range for the past 90 days has been less than 100 ticks, and we were already approaching that number on that move down. Anyway, who's going to complain about one trade that actually got filled? One total trade on the day for 73 ticks. No real complaints about that. So what I'm going to do is I'm going to let you watch that first hit but no fill where we tried to sell the high today on the ES. That's the bad news is we didn't get filled. The good news is we had the right levels that called the high on the day, and we tried to sell into that level. And then I'm going to let you watch that 73 tick CL trade. So without further ado, here is the OTG trades of the day. 3 even. That's your daily structure target entry location. There's hit but no fill. Hit but no fill. If this thing rolls away from this 4 ticks, then I'm going to take it off the chart. I'm in at 60. Stop is 71. Target is 23. All right, so you can see that we went right down to our target there. The market had a little bit more left in it, obviously, as the day progressed. But again, like we mentioned earlier in the first part of this video, there was no way to tell that today would be that day that it was going to break out. In fact, we've had 3 months worth of sideways to choppy action. So anyway, that is another good day here in the books at the Oil Trading Group. We're hopeful that as we continue to push forward into the coming days, that this may be a sign that the oil market is loosening up and that we can get some more of these types of moves. As for the CL, you saw, or the ES rather, you saw I got hit but no filled. That's the bad news. The good news is our levels called the high of the day, and next time we'll get filled. So anyway, as always, I want to say thank you for spending time watching the videos here at the Oil Trading Group, and until next time, I want to wish you good luck and good trading.